Let me guess, you've been trying to trade reversals, but you're getting stopped out more often than not. Or maybe you catch the move, but you're taking profits way too early. Or worse than all, you're entering, getting stopped out because you're not getting the timing right, and then the trade goes in your favor. After 11 years of trading and making over $11 million of trading profits, I can tell you that the reversal strategy is not what's holding you back. Rather, it's the way that you're implementing it. Truth is, reversal trading is one of the most profitable ways to make money trading, but it's also one of the hardest to master. I recently made over $40,000 on a reversal trade, but most traders are making the same critical mistakes over and over again. Today, I'm calling out these mistakes and showing you exactly how to fix them. Stay until the end, and I promise you the next reversal trade you take will be dramatically much more profitable. The 3 fatal reverse trading mistakes. Mistake number 1, trying to catch the exact top and the exact bottom. And honestly, this is a disease I see too much on TikTok, Instagram. You get these people that don't show their face, they're just showing you they somehow magically time the exact top and bottom every single day, and making you think that it's normal, that you should just randomly buy at some exact bottom and top. And that's how you should be trading these 100+ hour trades. And I promise you, 99% of those guys are probably just spam buying and selling on a paper or demo account, then posting only the wins, giving you a false narrative on what trading is really like, making you too obsessed with mastering the perfect entry. Truth about reversal trading is that you need confirmation before you enter. Trying to catch falling knives or trying to short a really strong trend could be disaster for your trading account. We're not here trying to time the market. We're not here predicting the market. We're here for the market to show us its hand, show us evidence, and the reversal will work, and then we enter. And this leads me to mistake number 2, not waiting for the proper confirmation or not knowing what the confirmation is. You see the first signs of a potential reversal, one nice green candle for a strong downtrend, you rush, you enter, and quickly get stopped out. How often has that happened to you? There are traps designed by market makers to pretend there's going to be reversal, create a quick candle the opposite direction, grab the liquidity, grab the traders who are too eager to try to catch that falling knife, try to short that strong uptrend, stop you out, grab that liquidity that you gave them, drive price down even further. Without multiple confirmation factors, you're trading based on hope, not strategy. And mistake number 3, something that a lot of traders do, ignoring the higher time frames. I see this too much from beginner traders. You're hyper focused on the 1 minute or maybe even the 5 minute. You're ignoring the real context of the market is on these higher time frames. Reversals must be traded with the context of the larger time frames, and then it leads you to a lower time frame confirmation and an entry. Remember that the strongest reversals happen when all time frames align together. This is why you keep fighting the larger trend versus trading alongside with it. Let's jump into the charts and let me show you how I caught a reversal trade today in front of hundreds of mentorship students. So we took a long position. As you can see, we were in an overall downtrend from the pre-market. But why was I looking for longs? Well, let's do top-down analysis and analyze why I was looking for these longs. We'll start as always on the larger time frame. On the larger time frame, I'm looking. What is the larger time frame overall trend? Mistake that a lot of traders make is they think that because there's a 5-minute bearish trend, the overall trend of the markets is to the downside. But if you zoom out, you get a better picture. I understand on this 1 hour, I'm in an overall bullish trend. And when I'm in bullish trend, I'm looking for reversals where high confluence points such as fair value gaps, a golden pocket Fibonacci retracement, support or resistance level. So in this case, I took my Fibonacci tool and I was looking for where does my golden pocket align or potentially take a long position. So what I do is I look for the bottom of yesterday, which was on this week here. And then I also look for the high of the pre-market as we go into today's New York session. I can see that my golden pocket aligns right here at around 23,347. So as the New York session opened, now I can zoom down. I have a high time frame key level that I'm looking for, and I have a key target. My target would be, hey, if this is gonna be bullish, where should price head? Probably a new all-time highs, which also ends up to being the overall pre-market high. So I can mark this out as all-time highs if I just type it in right here, and I know that's going to be a potential profit target there. So then I zoom in. So from 1 hour, top-down analysis, now I'm trying to look for a lower time frame entry. Do I have a fair value gap? Do I have something else that can line up with this? So we zoom in into the 5 minutes. In the 5 minutes, then I will bring up my other chart being ES, and I will look for the same type of idea. Now that I have ES and Q next to each other, I also can look for another confluence, which is an SMT divergence. In this case, I'll be looking for a bullish divergence around these levels. As I can see, ES here did not make a new low. We can take this 910 low right here that was created. We can see that NQ and 930 went below that. So right here, we would mark out an SMT divergence, bullish divergence. Again, another clue that this reversal of the pre-market bearish trend more than likely is going to happen and price is going to turn bullish. And I'm looking for all these clues, almost like an investigator, to find out what is the highest probability setup that I can take at this moment. So here, bullish SMT, you can write it in. And now I have two confluences so far. Now what I'm looking for is looking for the candles to close above this golden pocket. As you can see, all the 5-minute candles here have closed above. So then I can zoom in even further, and you can see how I went from the 1 hour and I'm zooming in. I'm using the time frame alignment and making sure that all these trades are lining up, because when I can line up all my time frames together, the percent of me winning the trade is very, very likely. So here we can see, hey, we had this big move down pretty much right off the open, these strong 1-minute candles to the downside. But what do we know? Strong candles more often than not are used for manipulation. So I'm looking for the V shape, right? We took out the low, we created bullish SMT, whereas the 5 minutes are still holding the golden pocket, which is my high time frame key level. I don't want to rush in, right? I'm waiting, and boom, we get the V shape recovery, and we inverse this fair value gap. So an inversion fair value gap is going to mean my confirmation entry after I grab the clues from the higher time frames to tell me, hey, this should be a solid spot for reversal trade, right? So here I'm setting my stop loss under the golden pocket candle right there, entering, and as you can see, zero drawdown, we go straight up. I can go break even at the most recent swing highs, which will be right here, and then just let my trade ride. Then I can zoom out and be like, hey, my high time frame key level, where more than likely should price deliver to? And as you can see, I had my all-time highs. That's going to be a target for the market. Target wants to keep pushing all-time highs. Think logically. What does the market do over the course of its life? New all-time highs, new all-time highs, right? That's why on average the market goes up around 10% every single year, right? So that's the mechanism on the market, knowing that it's going to be more bullish more often than not as well. So then we have the previous day closing price right here, where price flips screen. We hold it, and I'm not just closing my trade. And that's something important, is that when you're trading reversals, don't just close after 10 points. Try to let the trade ride. Ask yourself, is this still a bullish trade? Yes, we didn't get any big move to the downside. We didn't get any bearish inversion fair value gaps. We didn't reject from a bearish fair value gap. We didn't reject from a bearish golden pocket. We did not reject from a bearish SMT. So you let the trade ride all the way up, and I made over 116% on my options contracts, all the way up to 23,450, where I had my last TP. So you can see, I actually kind of kept going after that. And a lot of students, trust me, made a lot of money on this trade. And I'm taking this trade the same exact day I'm filming this. It is something that you will see more often than not. But how do you avoid not taking such trade? If the trade did not give us this confirmation, I would have not been in this. This is when you know when to actually enter. You don't just randomly try to enter. For example, if you had taken the long here, right, the golden pocket, if you're taking this long right here, as you can see, there's no confirmation. It's just you enter, there's no IFVG, there's no SMT. Guess what happened? Let's say even if you had a small TP right there, you would have gotten stopped out before the actual move happened. And a patient professional trader that knows when to take the reversal trade would have stayed patient, waited for your confirmation entry, then lined up with a higher time frame and profited with zero drawdown. And guys, remember, your trade should not really have much drawdown. If you're waiting for the right confirmations and the right high time frame alignment, all traders in that moment when you're entering should be like, yes, this is bullish, it should go higher. If you take a trade and you sit on a drawdown, it drags out a lot, it chops around a lot, more than likely, the main issue is that your high time frame alignment was not there. You want all traders that are trading 4 hour, 1 hour, 5 minutes, 1 minute, all be like, yes, this is the point where price should be bullish, and you should go straight to your take profit, or you should not take very low drawdown. So take these notes, use what I just taught you with this A+ trade example, and apply it into your trading. These reversal trades are really powerful because look at the risk to reward and the overall gain you can get. 100 points nearly on this trade and a 3.75 with a 1 to 4.81 risk to reward. Means out of 5 trades almost, I'm going to be profitable on one of them and I'll make money. This is why reversals are so powerful, but also really dangerous if you're not doing them just like I broke it down for you. If you implement what I've just shared today, I promise you your next reversal trade will be a lot more profitable than the ones you've taken in the past. Seriously, do this and let me know in the comments down below how it works out for you. For those who want to see me trade reversal trades like this every single day live, as well as get personalized feedback on your trades directly from me, I would like you to consider my mentorship program. I work with a small group of traders who want to learn strategies like this without the years of painful trials and errors I had to go through. The link is in the description down below if you want to learn more about it, and as always, I'll see you in the next video.